What's happening, everyone? Welcome back to another video. So as I'm sure you've seen from the title of this video, understanding candlesticks. Understanding candlesticks is such a key part of reading price action on a daily basis that I'm going to be running through some of the steps and the time frames, more importantly, of how to use certain candlesticks to your advantage. And in today's video in particular, dojis and spinning tops, the time frames, the entry signals, and more importantly, how you can start using them in your trading by the end of watching this video. So back, relax, get a notebook and a pen, and let's jump straight into the video. Right, so when starting out, I'd like to make it very, very clear that when you're looking for spinning tops and dojis, the higher the time frame, the more relevant the price action. And all this shows us is simply a build-up of price action or an area of consolidation on the lower time frames. So that's extremely important. But on the current example, I'm going to show you GBP USD. Does not matter the currency pair, does not matter the asset. You can look at Bitcoin, you can look at equities, gold, whatever the case may be. But one of my personal favorites, GBP USD. Now, looking at this on a weekly time frame, you really want to distinguish what something actually means. And looking at the weekly right now, we can see two forms of dojis. Now, a doji is a candlestick which has left a wick in either direction, right? Now, I'm going to attach a screenshot of this shortly. But just looking at the price action right now, we can see what is known as a dragonfly doji. And that's this candle right over here. This candle that we have over here, all this signifies to us and shows us is that you've had this massive wick to the downside. Now, to briefly explain what a doji is and how you can really read this, you really want to identify what it actually is. So looking at this, you want to know and realize that the market opens on the left, has the high, has the low, and closes on the right-hand side. But what really is a key takeaway from understanding dojis for me, and how I use this still till this day on a weekly time frame, is knowing that throughout that whole trading week, the market was at this low price, but it's had all that buying pressure to keep pushing up to the point of where it is right now. So where the market closes is extremely important, but you also want to take into consideration where it has been. So I'll briefly reiterate that in this scenario. The market opens on the left, has the brief high, has the low throughout that trading week, and closes relatively exactly the same price as where it opened. Guess what happened then? That shows us there's a lot of buying pressure because the market couldn't sustain at these lows. We had that follow through on the next trading week. Equally so, over here on the left-hand side, we do have what is known as a gravestone doji. A gravestone doji is equally opposite, but it shows more of that bearish selling pressure where you have your open, you have your high, you have your low, and you have your close, right? Notice how the market still rallied the week thereafter before closing bearish. Now, what you want to be doing with these candlesticks, you want to use them to your advantage. All this should do for you is give you some sort of indication that the market has slowed down at this price. You want to then drop down to the lower time frames, which I'll include in another video. But for the purpose of this, I'm going to include a screenshot now on the chart. And these are the different types of dojis that you have. The more important lesson, or the most important lesson I want you to take away from this, is the fact that the market opens on the left, has either the high or the low, and it closes on the right-hand side. The direction that the wick was left is your clue, right? That's your clue. So in this instance, we had a perfect example, and I actually want to show you on the lower time frame. If you go down to the 4-hour time frame, you can really see that the market opened on the left, had the weekly low, had the weekly high, closed relatively close to where the weekly opened, and had that immediate follow through thereafter. But folks, this is where it really, really gets interesting, because if you see that price action, your job is to then look for structure. So in this example over here, we can clearly see that there was a nice little level of resistance over here on the left, which, and I'll go back to the weekly to show you, which was relatively where that weekly candle started. So the weekly candle started on the left, and had the low, it had the high, and it closed very close to and very in close proximity to the weekly open. If you go ahead and look at that on the lower time frames, that then is your trading signal. Why? You want to be buying from that area of interest. And that's something I'm going to include in further videos later down the line. But this is a perfect example of when you see that liquidity grab to the low, come back up into the high. Your job as a trader is to be buying on that next trading week from the lowest possible point. So in this example that we had over here, a beautiful little retest of an area of interest before that continuation into the upside. But going back to the weekly, I actually want to show you some more examples. And dojis can often be used as signals of a slowdown. All it shows us is a build in price on the lower time frames, gearing up or consolidating before that higher push to the upside. And that can often be seen ahead of very big moves. So I actually remember shorting this from around 135 early on or late on last year, early 2022, late 2021. Now looking at this price action, we can see price is clearly in a downtrend. Why? The market is creating very beautiful lower lows and lower highs, right? Lower high, lower low, lower high, lower low, lower high, lower low. I'll include that in another video in this coming series that I'm presenting. However, I really want you to keep your attention on the reversals that occur. Notice how the market, let me get rid of this for a second. Notice how the market has these slowdown candles before the ultimate reversals. And that's your job. Your job is then to realize that when the market is slowing down, you really want to use this to your advantage and ultimately capitalize on the week thereafter, because that's the true meaning of these dojis. That's what you're really looking for. So if we do go down to the lower time frame at these levels, I really want you to see that structure plays such a big role in the price action that we actually see over here. Now looking at these areas are breaking structure on the lower time frame, right? And all it's doing is showing you an indecisive price action on the higher time frame. So for me, it's so important to use them on the higher time frame, but then go to the lower time frame to really identify what is actually going on here. So looking at this area on the weekly, we identified it as a doji, meaning prices build up and more than likely consolidating on the lower time frames, which as we can see, price is fairly range bound over here. You really want to then dig deeper and realize that the market is presenting itself with lower lows, lower highs, lower lows, lower highs, and it's giving you that signal to go ahead and short the market because of that break of structure that you have over there. So go check out my break of structure video that I'm going to be dropping very, very soon if you really want to take full advantage of that. Now, looking at the bullish example that we had down here, same thing, right? The market is simply breaking out and creating higher highs and higher lows in our area of slowdown. So remember, a higher time frame doji simply shows you the build in price, so the area of consolidation. Your job then on the lower time frames is to go ahead and look for those lowest possible places to then buy these dips. So if you do look at this, the market is stuck in that range. Once we did break out with this candle over there, notice how we're just creating higher highs and higher lows as the market was trending to the upside. The exact same principle, but what you want to be doing is simply use the weekly time frame as your indicator to show you there's a slowdown, there's a build up in price. So personally for me, when I see a weekly doji, I really get excited because I know that next trading week will more than likely be a very easy one to trade. Now, looking at something else on the weekly, I really want to show you, especially on GU, there's so many examples of this that it really is such a beautiful pair to trade. In case you haven't, GBP/USD, probably one of my favorites, all-time favorites. A spinning top, and I'll put an example over here. Isn't two weekly candlsticks, that are range bound, very similar to dojis, but they have very small bodies. So very similar characteristics as a doji. They have not a big body, which shows there's not much market volume, but it represents the exact same thing. So spinning tops are two weekly candles. Ideally, one bullish, one bearish for a bearish reversal, and then one bearish, one bullish for a bullish reversal. So in this example, I'll show you both examples. In this example over here, we had the exact same thing. We had a nice little reversal over here. And guess what that is? That is, let's move that. That is simply a spinning top. You had your very similar characteristics to a doji, small body, long wick on either side. And all that is showing you, folks, is a consolidation on the lower time frame. I don't know why these circles keep going bigger, but yeah, all that's showing you over there, folks, is an area of consolidation, right? Your job's then to wait for the breakout, and we're extremely range bound at this price of year. Simply all you have to do is then wait for that decline, right? I'll get into Fibonacci on another video, but Fibonacci is a beautiful example on how to truly take advantage of these price swings, especially when you take in full advantage on the weekly time frame. You can really capitalize on selling the rallies once you have the breakout. So a very, very quick breakdown from me. However, please keep in mind, Doji candlesticks, daily time frame, weekly time frame, all that's doing for you is showing you a build in price on the lower time frames. Your job is to then be patient enough to wait for that breakout and ride in that direction on the next trading week. But I hope you enjoyed this video. Do stay tuned. I'm bringing this as a series to go ahead and teach you the basics of what you really need to know and how important candlesticks are to me as a trader on a daily basis. Thanks for watching. Stay tuned in the next one. Take care. Bye-bye.